we have, over a quarter of the global 2000 are clients. And so I think we're constantly exposed to non-public information. Like one of my favorite, like when did we have the early data? And I wish we had our own hedge fund was like, you could see the effect of the Bad Bunny, Post Malone sponsorships on Crocs sales, like 6 weeks ahead of like reported earnings.
Hello, fellow data nerds. My guest today is Michael Ramlet. Michael is the co-founder and CEO of Auren Consult, a global survey research and decision intelligence company. He started the company in 2014. It has grown to over 100 million in revenue. And Auren Consult now conducts over 30,000 interviews every day across 40 countries. Michael, welcome to World of Desk.
Thank you for having me.
I'm very excited. Now, why did traditional polling just break down?
I think you have to think about polling more broadly in a historical context. So it's gone through mode shifts in the past. You go back to the Roman census and I guess all the way to today's census, they're still knocking on doors and doing live in-person interviews. The next big sort of mode shift was to mail-based surveys. And then you get a mode shift to telephone. And then you've now got this most recent shift online and essentially from desktop to mobile. And so I think you think about each one of those components and the parts of it are different. Just think about from like the labor cost standpoint, the cost of a survey, if you're doing live telephone or in person, is really the cost of the person's time conducting the interview. That's very different in a mobile and online world when there's not a live human being conducting it. And so I think what it takes to be good at any one of those modes is very different. And most of the legacy players started in a live telephone or a live in-person world. And so they had
when I was in high school, and this is like, hundreds of years ago, I used to fill out these surveys, and then they would send me $10 for filling out the survey. And I loved it. I was just constantly filling out surveys, and I just try to make as much money as possible doing it. But also it was fun to fill out the surveys and stuff. And that was that was in the mail, physical mail. I would send it back.
Yeah. Think about it this way, right? It's a real problem with the time value of money if you're doing it to make a living. And we ask a lot of psychographics about the motivations taking surveys. And I think the two things that stand out are there's a lot of folks that don't necessarily have a job or a role in their family in which they make a lot of decisions. So I think they find it empowering to sort of share their opinion. And I think secondly, not every job is a highly engaging intellectual exercise. And so I think other folks find it intellectually stimulating. And I think those tend to be more so the case, especially among older respondents or among respondents who are of higher incomes.
People answering questions about themselves, right? They love that. Because you felt like those personality tests online are super popular. Like, what kind of cat are you or something, right? So people love that. It
speaks to how hard it is to go find a representative sample. And that's been the big failure of the legacy players is that they just didn't take the time to understand what it takes to be successful from a supply chain standpoint. It's harder to find a representative sample than randomly calling the phone book. A lot easier to run a polling operation when you just randomly dial the phone book. Much harder to go find representative samples, not just in the US, but certainly abroad, especially in developing markets. And I think that's a big challenge that the industry legacy players just didn't care to focus on. A lot of it, they were going through the private equity turnstile. So the idea of investing in kind of what was a cost center for the industry, I think held it back. Everything that happened in ad tech over the last 20, 25 years just didn't happen in the survey market research industry.
And often once you start, the N is pretty small. So once you start subdividing the N, even if the N is 1,200 people, well, once you start saying, okay, well, this age group and this gender and this state and this, all of a sudden the N could be 5 people or something, right?
Well, that's the problem, right? With live telephone in person, it is extremely expensive. I think one of the things that was our first big unlock inflection moment was when we realized that people were not differentiating by how difficult it was to get that survey respondent. There are more women in the Western census region between 18 and 29 willing to take a survey, making between 50 and 100K, than there are over 65 men without a high school degree living in the Midwest. You should pay more for those men and less for those women. And that was the first big unlock for us. Essentially, at our core, we're like a commodities trading hedge fund. We're better at acquiring a higher quality interview. But because you can drive down the unit costs through those bidding algorithms, now all of a sudden you can use much larger sample sizes. So to your point before, the big frustration point was once you got to a second demographic or a sub geography, you had very small sample sizes. And that was always the Achilles heel of these large telephone operations. They just couldn't get enough respondents. The other part is
Yeah.
like you can't show visuals, you can't do other sort of dynamic tests in an audible telephone call. And it takes longer to actually read the interview than it would be to read the screen.
There's also like a spot poll or spot questionnaire where you want to figure something out, but then sometimes you want to ask the same group of people over time similar questions and see how those people are evolving as well. And there you don't want you. It's really important you don't have or you have as little churn as possible in that poll, I presume, right?
Yeah, I think if you think about it from our perspective, some of this we got lucky. So, I think we had good ideas. I think we thought we were going to work really hard, but right time, right place. We got to start the business in a cloud-based computing world when everyone else had, on-premise servers in the industry. I think we looked at it and said we wanted to go every day because our whole mission was we wanted real-time intelligence on what people think around the world. And from our standpoint, that meant you had to constantly be asking them what they think. And so, to your point, kind of a set standard questionnaire that goes every day. So it's kind of 30,000 interviews, no matter what, we're going to go and collect the data. But what became the lucky part of that was because we had guaranteed demand, you could have peaks and troughs for other surveys that are going on. So the
Mhm.
supply chain really loved us because we could guarantee an extremely large volume. And in exchange with the bidding algorithms, we were essentially able to achieve most favored nation status. So we drove down the unit cost while actually increasing the volume of surveys that the supply chain could expect. And those things allowed us to get smarter and smarter around what it costs to get what population in what country. And so it became this reinforcing network effect.
No, you have like the Bureau of Labor Statistics, like traditionally, like called people up or called employers up or called HR
Still,
departments
still,
up. And
still do, to be clear.
I know they still do that, right? But then there's also like real data that they see, like they can, like, I think they get data from ADP, they get some other data that they actually like in some ways that's like passive, that's almost like a passive survey,
Yeah.
where they're getting the real, like, well, how do you think about that? Because obviously you can get data of like, are you still using Netflix? But you could also get the credit card data as well, which would prove if they're actually like getting billed by Netflix or if they're churning from Netflix to Disney Plus or something like that.
Yeah, I think it's a combination of both worlds, right? Like you're thinking about it before you do it. So the tighter that time frame, like if it's an impulse purchase at the convenience store counter, like the transaction data is probably going to be extremely accurate because it happens with frequency. But the
Yep.
better idea is like just the tier to which some of those CPG companies don't have that point of sale data point and have it processed instantaneously. And so I think when we look at it, a good example would be the work we do with the Chicago Fed. For their carts model, they're pulling in the large data processor credit card transaction data, and then they're marrying it with the survey-based outlook data on consumer and retail spending. So I think from our standpoint, we really try to benchmark against what would be the sort of real world outcomes. So the number one thing we do is we benchmark, for instance, against equity markets. On a platform called Meet Century, they'll do all the back testing for all of our brand indicators. You might be thinking about taking that vacation weeks before you actually make the transaction on Airbnb or another booking platform. And so subsequently, that's a 2 to 3 week alpha that you might be able to leverage out of that database and then to be able to benchmark it against the underlying SEC reportable financials. I think we've seen that as the sweet spot of behavioral data married with that real-time sentiment representative survey data.
In some ways, like if you think of data companies, they're often like doing one of two things, and it seems like you're doing both. One is they're trying desperately to predict the past, and really trying to get an accurate position of what happened in the past. And then there's other companies that are trying to predict the future. And they're both actually incredibly difficult to do, right? So you can have, hey, what do you feel about this? But you can also, hey, are you going to make a purchase in the future or something as well, right?
Well, and that's where it comes back to the frequency part of it. You look at the Michigan Consumer Sentiment Index, it's great that it goes back to the 40s. It's deeply problematic that it's at best like 700 people. It takes 3 weeks to process the data. So by the time they're
Yeah.
reporting the data publicly, that was our big unlock at the beginning of the pandemic was we had gone to the Fed and said, hey, we're doing instead of like 600 a month, we're doing 6,000 a day in the US. And then, oh, by the way, we translated 24,000 interviews in those 43 international markets. It's programmatically available in API at like 1 a.m. East Coast time. And that was a big, demonstration of credibility and capability. what we originally approached the central banks about was, are there other indicators like inflation at that point? You really hadn't seen any meaningful inflation. So there's a lot of discussion about should the market basket change. And so we actually started working with the central banks around like what are new potential indicators given kind of the gray economy and the gig economy writ large. And what then happened at the beginning of the pandemic, the Fed cited, came back to say, hey, remember that daily data you're talking to us about? Can we get that? And I think to the surprise of other large banking clients who use the brand tracking capabilities, it was like, wait, you have daily data on consumer sentiment in the US. I think for us, up until that point, you just didn't have the like, oh my gosh, I needed this moment to make a decision right now. And I think that has sped up since the pandemic.
Yeah. And the Fed is a big consumer. I mean, we're involved with so many data companies, and a large portion of those sell data to the Fed.
Yeah.
So the Fed is a very big buyer of different types of. So if they find like an interesting data set, they're willing to buy it and see if that can be predictive or help them understand like a nuanced thing.
I think the approach of going with nowcasting is that right middle ground, like the challenge of predicting the future, like so many like insert favorite like quote. But I think that nowcasting ability of like, here's the like accurate barometer of higher frequency data at this moment in time. And I think that's what you're seeing, or at least I'm seeing from CEOs, CFOs. They're pulling guidance because the ability to sort of give that confident guidance 9, 12 months out, but they still have to get on the earnings call and talk about what happened in the last quarter and what do they expect in the next quarter. And so that sort of nowcasting capability, which, to your point, the Fed's been a pioneer in, I think that's where we're seeing some of the most sophisticated activity.
And, there was this, if you remember, there was this study of Harvard students that JFK was actually in that study, and a lot of famous people. And they kind of like, it was a, 60 plus year study where they actually followed these students, and they would follow with surveys of them, and they saw how they changed over time. But of course, it was this very narrow, like super elite, mostly super wealthy back then, all men back then, study there. And yeah, they have all these findings from this, but it was just, again, so narrow.
Yeah.
Like, what would you, if you could like reimagine in something like that in today's world where we're going to, what is that? Do we get their medical records? Do we get like their bank statements? Do we get their like Fitbit and like Apple Watch readings on a daily basis of these, like how can we reimagine something like that today?
I mean, we think a lot about how challenging it is to get a representative sample of a population to get the data off of. And so I think we felt really lucky. We also played with a little bit of house money. We bootstrapped the first 5 years. So there wasn't much parental supervision. And I think in hindsight, that was to our benefit because the idea of committing to going to do that many interviews on a daily basis really committed to a high fixed cost. But the reality was if we could sell it and stay ahead of that curve, then we could continue to expand the data set. And so I think from our standpoint, we were excited because the thing we knew you couldn't do is go back in time and collect the data. And the representativeness of what you could do with surveys was the really valuable kind of.
With some data you can. I mean, like there are some data sets that are like you actually can go back in time and get payroll data. You can go back in time and get, so there are these data sets which are like somewhat substitutes for surveys.
But you get really limited demographics off of it. I think that's what we were always excited about. Like, I think when we look at our data set, what makes it different is the breadth of the data. If we think about like every row is a person, every column is a question, and you can cut every column on another column. And so I think from our standpoint, where we look at other numerical data sets, and I think what made it challenging from an engineering standpoint was just how the breadth of the database is a little bit different than some of the really large numerical data sets. And I think that was
really, if you think of like Raj Chetty, is economist at Harvard, he's got access to the IRS data. So he, which is this like massive study on over 100 million Americans, their kids, their grandkids. How are they doing? How do people change? How much do they give to charity? How much do they move around? I mean, it's this incredible study that like maybe 4 or 5 researchers in the world get access to, maybe unfairly, right? Like, could you imagine if exactly. Everyone could get access to that again, like in a somehow anonymous way, like it could really blow out the world's knowledge or something.
Yeah, but it's still confined to what they ask the questions on. right? So
Sure.
that I
Yeah.
think that's always like when we look at it is like this desire to ask anything we possibly could want in the future to try and get even more breadth. So like for instance, like one of my greatest regrets is like I wish we had tracked the housing market sooner. Like it just would have been even more compelling to have a larger longitudinal database to it.
Yeah.
But I think, obviously you have to make, gives and takes when you have the capital to make those investments. But I think from our standpoint, the issue is, or the exciting thing is we could keep adding to it. And that, obviously the investment in some of these large longitudinal studies at a governmental level has dissipated or they're locked into a mode. Like I think that was the challenge for Michigan was just they had always done it telephonically and they just didn't make the jumps. They made the jump a year ago and all of a sudden the trends all break and it's a lot more challenging for them to find a representative sample online than what they thought was sort of representative sample on telephone. And you see this then in terms of market movements. You had some pretty wild swings in the first 3 months of this year with that monthly data set. I think that's the innovator's dilemma in a core, right? Like you're going to have some mode effects. That's what keeps me up at night. Is like, okay, is there a mode effect change that takes place?
Well, having like a representative sample is always hurts. Like even the S&P 500, right? It's like that those 500 companies are very different
Right.
than the 500 companies that were there 50 years
Yeah.
ago in the same index. And so they have to like slowly add, they have to slowly reweight. They have to think about all the, like, it's very nuanced and very hard. And of course, like everyone hates it. Everyone thinks it's stupid, right? Everyone
But
argues
everyone
with
wants to
it.
be in it for higher trading.
Yeah, of course, everyone wants to be in it. Of course, yeah. So, I think these things are really hard to like get any type of sample that people will believe because it's always like a religious battle when you're talking about a sample.
Yeah, I think if you had to like the synopsis of what went wrong in the survey market research, because it's a way bigger industry than most people realize. Andreessen wrote a note a couple weeks ago that pegs at 140 billion. The number I tend to look at on at least the quantitative side is around 80, 90 billion. So there's plenty of money being spent in the
Yep.
category. It is extremely fragmented. So I think that's one of the things that oftentimes surprises
A survey could just be like one expert
me.
too
100%.
sometimes, right?
Yeah, and also there wasn't economies of scale around the tech stack. And so I think if you looked at like what was the problem of the industry, it was too slow in terms of the frequency and processing of the data. It wasn't getting large enough sample sizes to do that kind of second, third level combinatorial look. And then the third was just it was too expensive. Like it just was prohibitively expensive to go and collect that data. And I think that's what's exciting now about where the industry is. Like a lot of those things I think have been unlocked. You still have the legacy pieces of it. The big question will be for survey research, what is the next evolution of it look like in terms of not just traditionally survey data in the context of political polling, but in the context of economic data. There's a lot of pressure, especially on even developed economies at this point, to find representative samples. And then frankly, even more so the case in market research, kind of that corporate capacity.
Now, the market itself, in some ways, is a massive survey where people actually put their dollars. So if the market that the market about the Apple stock price is actually like a very efficient market that's out there. So, and then of course now we have these like prediction markets where people are trying to opine on tons of different things, and those tend to be really interesting and quite predictive as well. Like, how do you think about like the markets in general?
I think at our core, we want to be a leading indicator of any market. So regardless of whether it's betting markets on a particular event, or if it's equity markets, or if it's currency markets, because obviously tracking a lot of the underlying economic sentiment pieces globally plays into the currency FX play. But I think from our standpoint, those markets reflect all.
Sure, not necessarily from your standpoint, but like, how do you think about like just in general the prediction, like these prediction markets? Like, what do you like about these markets? What do you?
I think making markets creates transparency, and I think that's a good thing. So I don't think there's any downside. I think the question is like, what's informing that market activity? And what you saw even like political prediction markets is that surveys were being used throughout that process. So even like the whale on that kind of larger Harris Trump bet, was conducting his own private surveys. So I think the degree to which like it's going to inform markets, I think our view is that the more market making that's going on, the more opportunities there are to leverage the data. So I think we're pretty pro the development of it.
And what is stopping? Like, it's some of these markets are still like not. There's a lot of Americans can't bet on them, et cetera. So there's like less liquidity than there could be in these, and maybe it's less accurate because of that. Or I don't know. How do you think about that?
I think it's the breadth of things that you'll want to track go beyond what the markets cover. So like they tend to be very like event driven markets, and might be things.
Well, they tend to be things you can easily adjudicate.
100%.
So right. So it has to be,
like,
will the Fed increase 0.25% or not by this date? Then it's easy. If there's a nuance, it's hard to bet on it, right?
Totally. But that, like, I think is why I don't view them as replacing it. I think it's a way to monetize that type of knowledge and to really hone in. I think there's just such a broader use case of the data. Like understanding your customer base isn't going to be derived out of prediction markets, or understanding, a good example might be like, what is the underlying interest among a emerging population in a particular product? Like one of my favorite, like when did we have the early data? And I wish we had our own hedge fund, was like, you could see the effect of the Bad Bunny Post Malone sponsorships on Crocs sales, like 6 weeks ahead of like reported earnings. Just this like massive pop in the daily tracking around interest from Gen Z, and then from Gen Z's parents. And you could see it in the data, like, and you could specifically like, when did the Bad Bunny like sponsorship drop, and when did the Post Malone sponsorship drop? And you're like, man, I wish we could trade on that like type of information. So it gets as colorful as
Crocs a public company? I don't even know.
It hasn't been something we track so much on this. We have so much non-public information that I don't trade, but it definitely we have a bunch of buy side clients. But the question on those are like,
oh, you personally don't trade because of the information, or
no? We have over a quarter of the global 2,000 are clients, and so I think we're constantly exposed to non-public information. So
got it. So you just find it safer not to trade at all.
But so I think from our standpoint, we really feel like prediction markets are additive. I think in the same way that we're really excited about being able to benchmark against equity benchmarks, against currency benchmarks, those things create opportunities for real world comparison and improve the process. The political polling is really hard. And I think this is not fully understood. It's not about finding a representative sample of the US, because there's not compulsory voting, not everyone votes. And the issue is every election cycle, whether it's a midterm or a presidential, has an entirely different participation composition. And so you have to both predict who's likely going to show up, and you then have to go find a representative sample of that prediction. And so I think that's why it's like the ultimate test.
It's like a double problem.
It's an incredibly challenging proposition. I think, you know, if you're running a business, you're probably not looking to win.
And also like there's some things that, you know, maybe the president, everyone in the country has an opinion on, but basically after the president, like you go down just one more level, like a lot of people don't even know who their governor is. Right. So it's like a really hard, it's really hard to like pull on like these like lower information types of things.
Yeah. And I think you got to think about like, what is the activity? If you're running a political campaign, you're running all the way through election day. So you're looking at a lot of the momentum shifts and the tactics and whether it's working or it's not. I think if you're looking at it from a business standpoint, like you're not trying to win the product category like 48-47. Like hopefully you're trying to win it by a much larger margin. And I think what folks misunderstand is that like the data gives you a context of where it is today. It doesn't mean that's a guarantee where it'll be tomorrow. Obviously, like the shorter term prediction, like the more accuracy. But the issue is that like you can move public opinion. I think that's the thing that like differentiates really great executives or really great political leaders is like, it just gives you a sense of how much you're going to have to educate or persuade and move a larger population. And I think that's the difference between sort of weak-kneed leaders and leaders with conviction is like, hey, I understand where the data is. This is the right decision to go in that direction. But I recognize in the short-term, mid-term, the onus is on me to, you know, provide that education or, you know, hold steady for those numbers to materialize over the intermediate long term.
Roll of DAS isn't just a podcast. Roll of DAS membership is a private, invite-only community for founders and executives of important data and AI businesses. It's a place for off-the-record, high-trust conversations focused on the biggest questions data leaders are facing. The community is about peer learning, curated intros, and access to private events. Everyone in the group is building or leading something meaningful in data. If that sounds like you, apply to join at worldofdaas.com. That's worldofdaas.com. If you look at like the last presidential race, Trump-Harris, it did seem like a lot of the Trump ads were about persuading people. They were finding niche audiences, black men, or whatever niche they could find, and then even maybe more niche than that, and then trying to persuade them to move. And if they could just get X amount moving, like that would lead. And of course, they're only trying to persuade people in the 7 or 8 states that mattered and stuff, where it seemed like the Harris was like much more broader, just trying to like maybe get people out to vote, or they were advertising in states that they didn't like. How do you, when you kind of, I know you're not a political person, but how do you break down their strategies?
Yeah, I think from our standpoint, obviously make the full API available. So you can take advantage of the like 6+ million interviews we do in the US, and you can see like the dramatic events like Biden's debate or stepping out of debate.
Yeah.
And you can obviously see like, anything within the margin. That's what kind of is incredible about like how tight the most recent cycles have been. I think what stands out to me is like kind of the way you describe it, which is like the political aspect of spending money in this space is even more aggressive on an even tighter timeline than what large corporations do. Like they're essentially standing up like a full scale national company overnight in like 3-6 months. They're moving $1 billion next month. And so like just the degree to, and yes, there are like appendages and all the different pieces, but the reality is like you're essentially scaffolding on the fly at, outside of OpenAI, very rare levels of like that level of like growth in terms of like the scale of an operation. And I think from what we're surprised by, and I think this also surprised many folks in the political spaces, for how advanced the ad tech side of it is, the polling like research side of it, like these are predominantly a small group of still a lot of just predominantly men in the DC area that have been doing it for 20, 30 years.
Yeah, a lot of them are super old.
They own their own call center. Like, they'll send you a physical binder. Like you walk into any like major campaign office.
I mean, I know a lot of them, and these guys like they would like a bunch of them like went to Harvard in the 70s. And they're like super smart. They were the first like the people to think about data in the 70s and stuff like that. But like they're still the guys who are pulling. Like it's just crazy that it's like it hasn't really evolved.
You're this trusted strategist than you are like it's a data driven operation. And I think that's where the differentiation really splits between like larger corporate applications or financial service applications versus political applications. Like it gives you a read on that. I think that'll change. Like at some point here, it evolves. I think when we first started, because we started the company out of DC, and a lot of us had different backgrounds, and just a joke, like the old school pollsters couldn't program anything other than their Nest. And I think like the degree to which like,
well, by the way, I don't think that's true. I think a lot of them actually were like they were good programmers for their day.
The larger stuff, they're not.
They actually could. They actually, they certainly could write good SQL, and they could do. They could write like they had. But they kind of came out of that like 70s. Like they were the first ones. The reason why they were successful, they were the first people to adopt computers. Like if you read the histories of all these like pollsters, like who started in the 70s, they're amazing.
Like mayoral races and totally. Like, but the reality is like for how long, like that, it's been the same way for political polling for 2 or 3 decades. One of the reasons why we never went into this space. The other is it's just not a particularly good business model to follow. I think from our standpoint, what we wanted to do was to benchmark daily data sets against the toughest challenges. And one of which is how do you track politics? I think, if you look at the modern political polling space today, I think we take a lot of credit for, we forced everyone to have to move to daily. That was never something that was like all your old school media partnerships once a month at best, 600, 800 responses. If you look at it in the last 5 years, I think this is starting to change too, is it's not just about U.S. politics, and it's not just about U.S. politics in the context of U.S. politics. So for instance, like those 24,000 interviews we do a day in 42 international markets, like you can see the impact of American politics around the globe. You can see, for instance, geopolitical risk implications. China, in the lead up to the tariff announcements, beginning with kind of the North American tariff announcements, China passes the US in global net favorability for the first time ever in our tracking, presumably for the first time, post World War II. And you see the US dynamic playing out internationally. You obviously had about 75% of the world's
Yeah,
population.
which is super worrisome.
Right, 100%. In terms of like
Yeah.
the expectation, I think, as general American is like, oh, America has this really legitimate goodwill in foreign markets. That's not the case. The BRICS, obviously, most recently with kind of their announcement on pieces.
When we think about, let's say, consumer sentiment, how is like the tech industry doing in consumer? You hear about things where the consumers are becoming more anti-tech, but then you also hear the most maybe the companies that are most admired in the world are companies like Apple and Amazon and Google. So where is that
It's
going?
like Congress. People hate Congress. They like their congressperson. And like even like in this era of like unprecedented disruption, like still like 90% of them get reelected. But like
exactly.
Congress approval rate never low. I think the interesting dynamic on this is actually developing.
And by the way, I don't know that they like their congressman. They just don't like the other person running against their congressman.
Yeah, like all kind of like
yeah. Yes, I don't know if they have any true love for their congressperson. I
hate Congress, but yet like the average congressperson gets reelected at an extraordinarily high clip. I think what's interesting to me is this distinction between established economies and developing economies. And you see a 30-point percentage gap between developing economies and developing countries, over 50% plus like net favorability towards AI. And you've got, or trust in technology and AI. And in established economies, you've got 20% and declining.
Well, so you're saying developing, it's even more?
Higher level of trust, higher level of like.
Oh, I wouldn't have thought that. I would have thought they would be in some ways like they might be the first guys on the chopping block who get hit by it.
Possibly,
but I think AI is going to hurt India and the Philippines much faster than it'll hurt Germany and America or something.
And it's not like, obviously it's not always the case that the public thinks something that's necessarily reflected in the numbers.
Correct. Yeah.
I think from our standpoint, probably the thing that stands out the most in terms of favorability or kind of outlook and general feel towards AI, the second most favorable outlook among the G20 is among China. The second worst outlook is among the US.
Oh, wow.
And so you see this very significant.
Who's the most favorable in
Nigeria.
the G20? Oh, interesting.
Yeah, it goes,
I would have not
most
thought
favorable
that.
Goes Nigeria, China, Argentina. The least favorable, South Africa, US, Canada, UK, and fourth least favorable.
Interesting. Okay.
I mean,
what's your psychological profile of the U.S. is why the U.S. is 19th out of 20 in favorability toward AI?
I mean,
and what's your psychological profile of China, where they're 2 out of 20?
I mean, presumably there's some aspect. Well, some of it's also information dissemination. So like I can't, I don't know what. Obviously, in China and each one of those markets,
AI is definitely like a scary boogeyman and stuff like that.
And obviously too, like I think this degree to which like a lot of the largest, most developed economies feel like they have the most to lose in terms of like the average like economic participant. And so I think that probably has a factor into the kind of fear gauge aspect of it.
As you're seeing other like interesting consumer trends, what other trends would you think are interesting that are happening, or things that people were excited about and now they're less excited, or vice versa?
I think the number one thing is the degree to which consumer sentiment has been fragmented and just the underlying health of the consumer. So I think in the past you had like sort of those national metrics around like, here is the US consumer sentiment. And the issue is that it is fractured dramatically around income lines. You see some reporting on that, but it's even more dramatic if you're in like the QSR space right now, or you're in casual dining, or you're in fast food. Like the difference between going to the higher end of that spectrum and down, like middle income consumers look much more like lower income consumers. I think you see it by geography. So like the housing market, that's what I was saying before, like my big regret is I wish we had our housing data going back further, because you can see that in certain cities, the housing dynamic, like I feel a lot wealthier if I'm in a stronger housing market, if I own a home, than necessarily what I maybe do in a market that's in a more significant contraction. So I think it's just the fragmentation of it. Like you had
how does housing like play? Because America's a weird country where it's very high percentage home ownership. It's let's say the reverse of Germany, which is very low home ownership, even though also like a relatively wealthy country that's out there. like I don't know the facts, but maybe U.S. is the highest one of the
Yeah.
highest in the world in terms of home
Take a
ownership.
second step onto that dynamic. The U.S. also uses fixed income or fixed
Yeah,
interest rate mortgages.
which is
That's not
very,
the
very,
case in like the UK.
that's right. It's very pro consumer to just lock that 30-year
Right.
mortgage
And so
in
that's
at that a
and
few
so that's what I think
percent.
like the markets, in this sort of going on, I guess, like 18 months of like sort of recessionary calls, the bears, like it just if you locked in a 2% mortgage rate,
Yeah,
you're not
you're
you're not
sitting
changing
pretty.
homes because you're not going to get a
Yeah,
2% rate today, but you feel pretty good about the rise in home value, and that gives you some economic boost or sentiment boost, and you're going out and spending. And so that's why I think when we
yeah.
look at like,
By the way, like I don't even understand. Like, imagine if you have a variable mortgage rate, and so imagine like every month if you're
oh
like
yeah,
if your rent was changing every month, you would just go crazy, and especially if it like doubled like over a 6 month period,
well,
right? You would go
they tend to be
crazy.
shorter duration too, so it's like an even larger swing.
Yeah.
Yeah,
Yeah, like I don't know how you deal with that. So I understand why so few people own homes because they probably have to just like they probably have to put way more in cash because
yeah.
getting a loan is pretty scary if it's going to change all the time. Whereas in the US, like you only have to put 20% down or something. It's a lot more easy to afford something.
And I think that so like the most sophisticated use case that I think I've seen here this year is the degree to which you're seeing now those CFOs being able to tease out customer bases. And we're seeing it from sell side research and we're seeing it from buy side. Is like it's not like how is the housing market or home improvement market. The CEO of Home Depot broke this out on their earnings call with their data, and it was what's specifically the sentiment of the Home Depot customer base, and how is that
Yeah.
similar or different to the competitive set. So I think it's leveling the kind of regional or subpopulation dynamics. It's almost, and this is why AI is so exciting. Is like
And Home Depot might be more concentrated in the
right,
southeast of America, and it might be more, male dominant, or whatever it might be. And
yeah,
so,
there are all the different components of it. But the idea is that like essentially in the past you had to go off these national metrics, and then I think the hardest thing. This is what I'm excited about with the AI applications. Is just like it's telling people to ask the question. Because I think one of the hardest things is like the technical limitations of what was possible for meant that you had a closed-minded understanding of what you could ask for. It's like, they told me I couldn't ask for Atlanta-based data, because it
yeah.
didn't exist, 10, 15 years ago. I think that's the aspect of it that gets it's problematic, I think, for older executives in particular. And I think it's just the degree to which like you have to stay open-minded. I mean, this across obviously the world of DaaS, like the assets that are coming online are so dramatically expansive compared to what they were even 10, 15 years ago.
How are consumers adopting it? Like when I talk to a 20-year-old, it seems like 100% of them are using some sort of AI tool on a daily basis. They're a daily
Yeah.
active user. When I talk to a 50-year-old, it's very rare. And when I talk to a 7-year-old, it's like super rare
Yeah.
that they're using any of these tools. Outside, maybe a couple of them are like have AI in the background or something, like a Duolingo or something, but
Yeah.
they're not actually like using them as much. Like, is it
Well,
that?
they don't
Am I right? Is
they
it
obviously
that
don't
bifurcated?
recognize that they're using them because they might be using Google search and they're starting to
That's
get
right.
like
That's right. They might, but
right.
I'm saying they're not like
Right.
actively
100%.
thinking they're benefiting from AI. Whereas like the 20-year-old is like actively going to, Perplexity or Chat GPT or Anthropic or Gemini or something, and they're like actively engaging and asking questions.
February 2023, we asked US adults. So this doesn't have the age breakout, but that'd be a good
Yeah.
follow up. Just 2% of US adults in February 2023 said they use Chat GPT several times a day. As of April of 2025, that number is 14%. So 600% increase in terms of multiple daily
Yeah.
use cases in the population. And so my guess is that, it would
It's
follow
very
a
concentrated
similar
in the
but
younger people.
accelerated,
Yeah.
like I would look towards out of our data set, like what was the adoption curve for TikTok? Or what was the adoption curve for like Instagram? Like TikTok's great because I can see it in the full 10-year like data set,
Yep.
like the advent of it. And then like at what are those tipping point moments where all of a sudden it goes from like it's a Gen Z thing to a millennial thing to
Yeah.
a boomer?
Yeah, because I just came from a family gathering, and I was surprised at how little the adults there were using. I wasn't surprised that the 20-year-olds were using
Yeah.
it, because like if you're in college, you have to use, like
Yeah.
it's kind of like it's necessary, even in high school, like it's necessary to be using these tools. you'll be lapped very quickly if you're not using those tools. But I was surprised, like really that they were like, everybody was like AI curious. These are smart people, my family, but they were like, their usage was quite low.
So this is something we think is a huge opportunity, especially with older executives or established executives, is they might be afraid to send like the analyst an email asking for data point. But in the like quasi like anonymity of AI, you can ask whatever you want. There's
Yeah,
no like, there's no
totally. Ask the
reputational threat.
randomest
It's
thing.
like,
Yeah,
I think
yeah,
that there's a number of like, I think we look at the AI application for our data as democratizing access. Like before, it was like very much analytical functions, whether it's insights, data analytics. They might have the raw API, they might use the SaaS platform. But with the AI tool, like I think it opens up the ability for more and more executives to ask questions they might be afraid of asking another team to.
how are you personally, not how is
Sure.
your company, but how are you, Michael Ramlet, using AI personally?
I think on a daily basis, the ability to use AI to come up with really compelling things for kids. So I have a 6-year-old, a 4-year-old,
Yeah,
and 18-month-old. So, you can come up with obviously all kinds of different bedtime story.
stories and
Yeah,
stuff
the
like that.
creative
And
side
you're
of
actually
that.
doing it. Like, I mean, I keep hearing about people doing it, but like you're actually
Yeah,
like
I think
getting
I think
getting
that's
cool
always like a
stories and
good, or
stuff.
like trying to figure out like ways and like that's
Characters.
like
Yeah.
one aspect of it.
Yeah.
I
That's
think
kind of
that
cool.
the
Yeah.
way I still use it the most is for business like questions, right? Like it's just incredible. I have an obsession with all of our code names are 20th century industrial revolution like names. So like literally the books behind, like it's the
Uh,
Titans, the House of Morgan type like naming conventions. And so instead of having to like think about how to explain why we went with this code name, it's like we have an Operation Bessemer. So it's like asking AI like
yeah.
write up a summary of the Bessemer press and how it transformed like steel and the
Yep.
civilization of America. That's it's not really like my day-to-day job, but like I think
It's kind of fun.
you
Yeah.
come across
Yeah.
something and it's just a little bit more compelling to go back through it. So I think on a personal basis, it's more the like the history.
And where do you when you're personally using it, where do you see like that kind of like a fissure frontier where there's a limitation that you see, but you're like confident in the next 6 or 12 months it's going to kind of like you're going to be able to use it for that.
I mean, I think about it on the professional side for me personally is just I right now, for instance, like we have the capability of asking like kind of a jobs to be done analysis before I go into any pitch or any client meeting. And it will pull up all of the sort of publicly available information, but then it'll cross it with all of our underlying data
Internal.
assets. And so I
Yeah.
think, what does that mean in terms of we're trying to talk about it in the context of like, don't think about like where it's going to be in 6, 12, 18 months. Like you don't know that definitive answer. Think about what would be the best possible end destination and just assume at some point between now and then there's an inflection moment that makes that possible. And so I think, when we look at it as like a lot of those things require some multi-step like pieces to it. The reality is like agents like should be able to at some point in the not too distant future, like the equity prep or the earnings prep pack that we should be able to send to you should be entirely automated like from start to finish, and it should look and feel differently. It's not like an automation of just replicating the same report every time, 8-10 weeks before your public earnings call. You should be getting a generated earnings prep pack from the platform. And I think those things, like all of it gets tighter and it's less of like the multi-step piece to it or less of like sort of the human in the loop review component to it. I think that's where like I see the biggest change for us, but I also think that's true of like most businesses. Like how many people are in that support function putting together like that earnings prep pack that all of a sudden now, like whether it's operational data, whether it's public opinion data like we're collecting or financial data, like all of those things can be organized and synthesized so much faster. So I look at it. The most recent case that saved me a ton of time was we were building out this outreach campaign to equity research analysts because we're just we had all the inbound and we're sort of thinking, okay, this is generating it. The ability to write essentially a prompt that can pull who the equity research analysts are for any given security. Like you can go find it. You can dig through like
Yeah.
different finance platforms, but like to get it within like 15 seconds is magical.
Now is it a feature or a bug if you go back, 11 years to, founded the company in like DC. Now I believe you're in the Midwest. Like, is there a feature bug that you weren't in the Bay Area, the San Francisco Bay Area?
Well, I don't want to jump the gun because I
Yeah.
think you guys traditionally ask that, like, what's the conventional wisdom advice that
Yeah. Yeah. Okay. Yeah. Well, let's
you do
jump the
so?
gun. Let's do it. Yeah.
Yeah, all
Yeah.
right. I
Yeah.
didn't want to
Yeah.
break the
Okay.
mold.
Yeah.
I think the conventional wisdom that's wrong is that you have to raise from blue chip VC. That's the core conventional wisdom, and I think that it was probably right during a period of time. Obviously, access to capital is changed and evolved, but I mean it less in the sense of it's not the signaling factor of it, like, because I think you can now go raise money from a lot of different places. It's more about like the alignment aspect of it. And we got really lucky. We thought we were going to raise a round from a fund who one of their partners got indicted the day that the academic cheating scandal broke. And it was like the best thing that ever happened to us.
Uh,
Like, we ended up going and raising from three really great kind of non-traditional blue chip VCs. One was Lupus Systems from James Murdoch. The other was Advanced Venture Partners from the US family, and the third was the fund out of Susquehanna. That it's not in one time limited space, and I think our advantage was that we had all the meetings. We bootstrapped the first 5 years of the business, but we were out of DC, so that already made us a little weird, especially like
yeah.
pre-pandemic. Even though we had kind of the who's who of New York and Sand Road, I think from our standpoint, the biggest thing was this flexibility of like longer duration investing. Like, we were not a great 3 to 5 year bet because we had to go build the data asset.
But most ventures is like a 10-year plus bet on something usually,
Yeah, I just
right?
meant that, like, in terms
Yeah.
of like, so like from the where we're based type dynamic, it was like it didn't matter at that point because we weren't, there was sort of that, at least pre-pandemic, much more
Yeah.
stronger feeling of like need to be in the Bay and those pieces. I think DC was unique for us. I was in DC. My national expansion strategy was to move to Chicago within 15 minutes of my mother-in-law and 30 minutes to O'Hare. I can make a
Yeah.
lot more East and West Coast flights. I have a co-founder in New York and a co-founder still in DC. Our headquarters is in DC, but like this DC DNA was compelling for our field because you had this familiarity with economic data, with political data. You had all of these underlying knowledge bases around survey research. So it was a natural hub and still is the headquarters, and probably about 40-45% of our staff are there. But I think that dynamic, the conventional wisdom being like you start a high growth technology startup in the Bay Area, you
Yeah.
raise money
I
there.
mean, you also like you started bootstrapped, and then kind of raised money, which is also different. Like some people either raise money right away, or they'll
Yeah.
start bootstrap and not raise money in the
Yeah,
future,
our big
right?
thing was that we got to the point where we could collect the data in the US, and then we went through and we thought we were going to do our Series A, and we found everyone sort of giving a discount to could you collect this data internationally? Because at that point, like you think about like Nielsen, it's like it's predominantly US data set. Like, yes, there are
Yep.
some like international pieces to it, but there wasn't a lot of international data sets in the survey research space like that. And so I think one of the things we realized was, we ended up benefiting from bootstrapping because I think you had to learn the hard thing about hard things. And I feel like now I tell everyone it's like bootstrapping, you learn the difference between AR and cash really quickly.
Yes.
And I think the degree to which we benefited from is it gave us time to grow up. I was lucky I had an incredible co-founder that had a data science or research background in Cal Drop. And then I had another technical co-founder, more of the computer science background in Alex Doolin. And for those two guys and myself, it's like it gave us time to get your sea legs and grow up a little bit. And I think, what the value of the capital did was allow us to say, okay, we're going to start tracking a number of these international markets. Even if the client base today is predominantly US centric, it creates the opportunity to sell multinational companies global assets, and it created the pathways for international expansion down the road because we knew you'd have to collect the data to then be able to go to market with it. So, I think that conventional wisdom, maybe the YC factor is still real. I mean, obviously, like the
Yep.
evaluation pieces are there, but I think from our standpoint, especially in these sort of not like defense tech would be another one where like obviously like the DC space has a number of like unique attributes to it. DC, I'll tell you, is the best.
Not really. Like if you think of like all the best defense tech companies,
Yeah,
I mean, very few of them are based in DC.
but they
Yeah.
have like large DC like bases
Sure,
now.
of
I
course.
think
Yeah, eventually they have to have their sales team there.
it's
Yeah.
it's a great angel investing community because a lot of folks run lobbying communication. Like, I think for us, like we really benefited from the angel stage when we bootstrapped.
Yep. All right. Since I asked you the last question we ask all of our guests, I'll ask you now the second to last question we ask all of our guests, which is what is a conspiracy theory that you believe?
Oh, so I grew up in Madison, Wisconsin, a Packers, Milwaukee Brewers,
Uh,
Milwaukee Bucks
I
fan.
was just in Wisconsin last week. I
Wonderful
love
state.
Wisconsin. It's my
That's
favorite state,
that's
especially in
a
the summer.
Packers shareholder certificate up there.
Ah, okay. Yeah,
It's an
yeah. I have a few
invitation to the
friends that are
best
shareholders.
shareholder meeting. You get
Yeah,
drinking tickets to go to the annual meeting at Lambeau.
amazing.
Um,
Yeah.
but my conspiracy theory that I do believe, I think is acutely the case in the NBA, is that I think that there is a scripted nature to it, or certainly a bias towards non-major markets. Good, like Midwestern, like you look at sort of the finals examples around officiating or the way that players move across the league. Like I'm all in on a number of the NBA conspiracies.
Oh wait, so I don't even know these NBA conspiracies. Like, give me an example of what's going on there. Yeah.
Oh, so it goes back to like Ewing in the '85 draft. Like, was
Yeah.
it orchestrated for the Knicks? There's a lot of conspiracies around the Jordan retirement in Chicago. They cover it in The Last Dance, like pretty nauseum. The 2002 Western Conference Finals between the Kings and the Lakers, just some very like bizarre officiating, unfortunately for Sacramento. So I think
Guys, so you think like the
I
NBA
think there's
is
a
kind of
very
tipping
real
this?
bias.
They tip the scales
Large
for the
market.
big
Yeah.
market teams like the
Yeah.
Lakers, the Celtics. I
I
mean,
think it's a
I don't
miracle.
know.
Like,
I don't.
Giannis still in one.
As a lifelong Knicks fan, I don't feel like anyone's tipped the scales for the Knicks. But maybe you're right. Yeah,
Not for
like I
lack
don't
of
know.
trying, maybe.
Yeah, exactly. They've
Their own-
tried, but like the
yeah.
owner keeps messing it
Yeah.
up. It's like, okay, yeah, that's fair. Yeah.
Yeah, I feel like there's a good WWE vibe to some of the underlying elements of.
Yeah, it does seem like somehow the Lakers always and the
Yeah,
Celtics
like you
like
get a
always have an
crazy
amazing
trade
team.
out
Like,
of like Dallas.
yeah,
Yeah,
yeah, that's true. Yeah, how did they get that trade? Like, it's a good
it
point. Like, it's
surprises everyone in the
somebody.
league.
Yeah,
Don't like.
I'm with you. I feel like there's
I'm not
definitely.
saying I agree
Yeah,
with everyone.
well,
I
because
feel
like
like
I actually like when you're an owner of a team, you are. It's actually not necessarily in your best interest to have your team do well. You're really, when you're owner in the NBA or owner in the NFL, you're actually really a 128th or whatever owner in the
yes, you're an LP.
in the
Yeah,
NBA.
yeah.
You really care that the NBA does super well. You don't care about your specific
See?
team like the Dallas
There's a lot of
Mavericks.
incentives
Right.
to think that there could be some real merit. You get
Right.
some
Right.
referee
It
gambling
would make sense.
sagas.
Like, you just want the NBA to do better, get the bigger contract, the bigger
Yeah,
TV
and I love the
contract.
NBA. Like,
Yeah.
I like all the
Yeah.
games.
Yeah.
I think that there's some real
By the way,
merit.
I hate the games. They're terrible. I hate watching the games. I don't watch them anymore. They're completely boring. I think they're losing fans. It's not interesting. I'd love them to like completely change the game, but so yeah, that's my whole shtick too. All right, this has been amazing. I love this conversation, all the whole conversation we've had. Thank you, Michael Ramlet, for joining us, World of Das. By the way, I follow you at Michael Ramlet on X. I definitely encourage our listeners to engage with you there.
Yeah, you can access all the data at morningconsult.ai. So everything we
awesome.
today,
Okay, yeah, do that
right
too. Yeah, people could just like DM you and ask your AI questions as well. So this has been amazing. Thanks again for coming on.
Take care.
Thanks for listening. If you haven't already done so, please subscribe to World of Das wherever you consume your podcasts, YouTube, Apple, Spotify, and more. And please help us get discovered by leaving a review. And check out worldofdas.com. That's worldofdas.com. And of course, connect with me on Twitter at Auren. That's AUREN. Would absolutely love to hear from you.